In today's world of low interest rates and unpredictable economic events, keeping your money in a bank account may not be the best way to preserve or grow your wealth. The old adage, cash is king, has lost some of its validity, and more people are turning to more robust and dynamic financial planning strategies. So in this video, we are going to discuss don't keep your cash in the bank. The video is going to be amazing. Make sure to stick till the end. Now before we get into this video, make sure to hit that subscribe button and leave a comment below saying I subscribed. I will try my best to reply to as many comments as possible. We dive into 6 such assets that have historically proven to outshine cash savings regarding safety and return on investment. From the tangible security of gold and real estate to the modern digital asset of Bitcoin, we'll explore why and how these assets can play a pivotal role in your financial journey. 1. Gold. Holding gold as an asset has been considered a safe haven and a hedge against inflation for the past 50 years, so it's often seen as better than holding cash. Here are some reasons. Inflation hedge. Gold is widely regarded as a hedge against inflation. When the real returns on currencies and other assets are negative, gold retains its value because it is a physical asset that can't be created at will like a fiat currency. Currency hedge. Gold can also act as a hedge against currency risk. If the value of a particular currency drops significantly, it can lead to a higher gold price in that currency. This is particularly useful for people living in countries with unstable or hyperinflationary economies. Safe haven asset. Investors often flock to gold as a haven in economic or geopolitical turmoil. Gold tends to hold its value better than other types of assets in times of crisis. Portfolio diversification. Gold often performs differently than other financial assets, such as stocks and bonds. This makes it a good tool for diversification if you already own stocks. Universal acceptance. Gold is universally accepted for its value and has been for thousands of years. This means that even if a fiat currency's value decreases, gold's value will still be recognized globally in financial markets. 2. S&P 500 Index. Holding an investment in the S&P 500 Index is often seen as better than holding cash due to the potential for higher returns and the power of compounding. Here's why. Historically higher returns. Over the long term, the S&P 500 Index, representing a broad diversification of the U.S. stock market, has provided significantly higher returns than the interest earned from holding cash in a traditional savings account. Passive investment strategy. Investing in an S&P 500 index fund is a type of passive investing, meaning it requires little time or knowledge about individual companies. This makes it a more straightforward investment strategy for individuals who do not have the time or inclination to manage their investments actively. Diversification. By holding the S&P 500, you're investing in 500 of the largest companies in the U.S. across a wide array of industries. This diversification reduces the risk associated with individual companies or sectors performing poorly. Dividends. Many companies included in the S&P 500 index pay dividends, which can provide an income stream to investors and can be reinvested to grow the investment further. Capital appreciation. Over the long term, the value of the S&P 500 has consistently appreciated, providing potential for significant capital gains. 3. Real estate. Owning real estate has several advantages over holding cash in a bank account, which makes it a preferred investment for many people. Here's why. Appreciation. Over the long term, real estate tends to increase in value. While market fluctuations can cause real estate prices to drop in the short term, historically, real estate overall in the U.S. has appreciated over the long term, leading to significant capital gains. Rental income. If you rent out your real estate, you can generate a steady stream of income that is often higher than the interest you'd earn on cash in a bank. This rental income can help offset the property's costs and serve as a steady income stream, especially during retirement. Inflation hedge. Real estate is often seen as a good hedge against inflation. As the prices of goods and services increase, so does the cost of renting or buying property. So, the value of your real estate and the rental income you earn from it could increase along with inflation. Replacement costs due to inflation increase the price of existing homes. Tax advantages. Real estate investors can take advantage of various tax deductions, such as mortgage interest, property taxes, and costs associated with rental property management. In certain countries, there are also benefits like capital gains and tax exemptions when you sell your primary residence. Leverage. Real estate allows for leverage, which is the use of borrowed money to increase the potential return of an investment. A mortgage allows you to buy a much larger asset than you could afford by only providing a percentage of the total cost up front. If the property appreciates, the return is based on the total value of the property, not just the initial investment. 4. Land. Like real estate, owning land can offer advantages over keeping cash in a bank. Here are some reasons why. Appreciation. Land often appreciates over time. While this isn't always guaranteed, land can significantly increase in value over time in many areas, especially those experiencing growth or development. Unlike properties, land doesn't depreciate due to wear and tear or age, and its appreciation is usually tied to factors such as location, zoning, and the overall demand for land in the area. Scarcity. Unlike other assets, they're not making any more land. The inherent scarcity of land can make it a valuable asset as population growth and development increase demand. Potential income generation. Depending on its location and characteristics, land can be used to generate income. This could include leasing the land for farming, timber production, mineral extraction, oil drilling, and natural gas wells, or developing it for rental properties. Lower maintenance and costs. Unlike buildings or homes, vacant land typically requires less maintenance and has fewer associated costs. There are no utility bills, mortgage insurance, or maintenance and repairs. Flexibility and control. Landowners have a lot of flexibility and control over their investments. You can decide to develop the land, sell it, lease it, or even hold onto it while it appreciates. 5. Treasury Inflation Protected Securities, TIPS. Treasury Inflation Protected Securities can be a better investment than holding cash in a bank for several reasons. Inflation protection. As the name suggests, TIPS offers protection against inflation. The principal of a TIPS increases with inflation, as measured by the Consumer Price Index, which protects the buying power of your investment. When TIPS matures, you receive the adjusted principal or the original principal, whichever is greater. Regular interest payments. TIPS pays interest at a fixed rate twice a year. The rate is applied to the adjusted principal, so, like the principal, interest payments rise with inflation. This provides a steady, albeit modest, income stream. Risk reduction. TIPS are issued by the U.S. Treasury, making them a very low-risk investment since they're backed by the U.S. government's ability to tax its citizens. This level of security is appealing to many investors, particularly those with lower risk tolerance. Higher potential yield than savings account. While the yield from TIPS is typically lower than that of other investments like stocks or corporate bonds, it can be higher than the interest rate provided by a typical savings account, especially in an environment of rising inflation. Accessible and tradable. TIPS can be bought and sold in the secondary market, providing some liquidity level, although the TIPS market isn't as liquid as regular Treasury bonds. They can be purchased directly from the U.S. Treasury at auction in increments as low as $100, making them accessible to individual investors. There are also TIPS exchange-traded funds. 6. Bitcoin. Historically, Bitcoin has been a high-performing asset, offering potential benefits over holding cash in a bank. However, it also comes with a unique set of risks. Here are some reasons why Bitcoin has been a compelling holding for some. Strong historical returns. Since its creation in 2009, Bitcoin has seen significant price appreciation. Though highly volatile, those who purchased Bitcoin early and held on through its ups and downs have seen substantial returns. Limited supply. Bitcoin's supply is algorithmically capped at 21 million coins. This built-in scarcity is a significant part of its appeal for many investors and can lead to higher prices as demand increases. Decentralization. Bitcoin operates on a decentralized network, meaning any government or central authority does not control it. This makes it resistant to censorship and also means that it can't be debased by policies such as quantitative easing, which can decrease the purchasing power of fiat currencies. Digital gold. Bitcoin is often likened to digital gold because it shares some characteristics with the precious metal. It's scarce, decentralized, and not linked to any specific economy. It is also mined to increase its supply. This comparison suggests that Bitcoin could potentially serve as a store of value and hedge against inflation, much like gold. Growing adoption. Bitcoin's growing adoption as a payment method by individuals and in the corporate world has increased its appeal as an investment. If this trend continues, demand for Bitcoin will grow.